too well for this this quarter. It could actually be a little bit of a handbrake. The PMIs declined sharply in June, so we take that on board. But overall sentiment, I think, is positive. What we saw last week, of course, was the central bank freeing up or loosening, capital requirements for their commercial banks. So we understand it's a debt-driven economy, and that gets everyone borrowing again. But that could be an issue again moving forward over the next 3 to 6 months, kicking the can down the road. So there's that side of it. They're bid up today, Sean. They're about 1.1% up. Hong Kong's up as well. So Aussie was down, and it's always a proxy for the Chinese market. Aussie dollar's down, Aussie stock market's down, but China's up. So overall, I don't think it overwhelmed, and it didn't really underwhelm. So we're just tracking normally along that growth trajectory.
Rustin Edwards, good morning, sitting in Geneva, head of fuel oil procurement at Euronav. All of this sentiment, very positive, Rustin. Obviously, the Fed also indicating overnight that they were going to still be maintaining a very loose policy. EIA inventory reports seeing another big drop in inventories, and yet oil prices are falling this morning.
Well, I hate to rain on the parade of the bulls, but the data out of the EIA, when you dig into it, was not as bullish as everybody wants to make it. Yes, there was a nice draw in crude oil, but when you build gasoline, which was arguably stated as going to be a very strong driving season with the 4th of July weekend, distillate stocks building, and then you have U.S. crude production up. I mean, if you look at U.S. crude production in the last 3 weeks, it's up 600,000 barrels a day.
Whoa.
From a low of 10.8 to now 11.4. Shale's coming back. And it's coming back.
So Carole was right. No.
As always, as my
husband. Should I ever second guess that? Sorry, Rustin.
No, that's all right. No worries. No worries. She was right. And, I think anybody who's a cheerleader for Shale's demise forgets that, once everybody gets a clearer picture of the regulatory environment, which has happened now in the United States, you've had good positive earnings around that thing. Oil services have been roaring. You see a lot more demand for truck drivers when it comes to moving sand, pipe, mud, which actually seems to be the biggest bottleneck right now to further growth, is actually getting the troops on the ground in the field to move the material around to the different wells to help stimulate the production. Shale's going to come back. I think I said it here last time I was on. I wouldn't be surprised to see an 11.5 number. It took 2 weeks to get there. Okay. But we're there now. And I think it's going to continue to trend higher. Now, how does that work into the overall calculus of oil stocks? It's a very precarious situation, because if we do get an increase of production out of OPEC, plus now you've got a trending higher U.S. stocks or U.S. production, you could see the market tip to oversupply going into Q4.
Well, Dr. Carole, perhaps that's one of the reasons why the oil market hasn't been getting too distressed by the OPEC impasse, because the supply, the demand outlook looking a little bit weak, but also the non-OPEC plus oil supply also looking like it's coming. Carole, if OPEC, the UAE were very quick last night to come out and say, whoa, there's no deal yet. Don't jump your horses. And once you open the Pandora's box of this conversation, we've already had reports that Iraq wants their quota adjusted as well. Do you think there's still some road to go on this negotiation in order to get to an actual agreement?
Actually, the first question I had when this whole disagreement emerged, like, why now? I mean, the whole problem was about extending the deal beyond April 2022. So we're talking about probably 9 months from now. So why this emerged at this stage, there was no need to emerge, but probably now I'm thinking because of the fear of additional supplies coming to the market. Now, of course, within OPEC, it's not going to be just giving one privilege to one country. Of course, it's the UAE. We cannot underestimate the power of the UAE, not only in terms of the production level, but its ability ability to increase capacity by at least 2030, and they are aiming quite high. So that will create further friction within OPEC in terms of other countries. You mentioned Iraq. I heard that too, that they are also demanding their baseline production to be increased. So that will not end here, but at some point, it depends on who has the strongest voice within OPEC, and OPEC is not always a fair organization with respect to its members. I'm not saying like who will get what, but you can see, for example, the commitment to production cuts, that there have been lots of countries still failing to meeting their 100%, deliver 100% on their promises. So that this kind of divergence within OPEC, and even more within OPEC plus, is quite expected. But and we should not expect issue when OPEC is going smoothly. I get worried because this is not the nature of OPEC. So since the beginning, from the 1960s until today, they are not really a coherent organization, but the countries with the biggest say, the biggest production level, the biggest production capacity and spare capacity will end up winning the argument.
Peter, we still have in the Asian story, and particularly in Japan, where the Olympics do seem to be now very much going ahead, the Nikkei falling sort of against trend from the region because there's still concerns about rising domestic COVID-19 infections in Japan. How big of a sort of weight is that on the sort of overarching Asian recovery in the second half, do you think, that the sort of COVID lingers along while vaccines are low in terms of their rollout?
Well, Sean, I spoke to a dear friend. He's an older gentleman. He's about 83, lives in Tokyo, a Japanese gentleman, and been there all his life. And he was saying it's now the fourth lockdown. They're going through this whole phase of uncertainty. Naturally, it's hit them all fairly hard from an economic standpoint. You can imagine in the center of Tokyo, a marvelous city, would have been expecting hundreds of thousands of visitors over that summer period, now zero. And then the next part is, so there's, I think, a handbrake to certainly their domestic economy. The Nikkei's had a very, very solid move to the upside, being very strongly bid up. And maybe it's getting a point of exhaustion, Sean. The other side, of course, is we've got tapers starting to be cut. Talk of it, with the likes of New Zealand possibly first cab off the rank. So the introduction of the carry trade again being a hot topic for traders in the currency game. And then where does Japan play? Does it keep on keeping on with stimulus and the uncertainty being how long does this lockdown last for? And then what ramifications does that have south of Japan, leading into the likes of Philippines? We're in lockdown here in Australia, in Sydney, and we've got Melbourne, Victoria, the state of Victoria, they go into lockdown tonight, as well as Queensland's in lockdown in Western Australia. So it's a major impact sweeping all of Asia, and it's a continuation that doesn't seem to be showing a lot of sunlight at the moment, Sean.
Yeah, we've got the World Bank today downgrading the growth forecast for East Asia and the Pacific Rim based on the slower than previously thought, based on this COVID resurgence. And meanwhile, Rustin, in Europe, there is a sense that things are slowly but surely in the glass half full weeks, the glass half empty weeks. It feels a little bit like we're in a glass half full window where the European recovery is getting there. The stimulus is finally making its way through the European Parliament and spending may start soon.
Well, COVID is rearing its ugly head here just as bad as it is in Asia. I don't know if you saw in the news last night, riots in Paris as Macron starts to imply that people need to have a COVID vaccine to go to the movies, go to a restaurant, go to a bar. So massive riots, not only in Paris, but in Marseille, Nice, as the general population say it's infringing upon their rights. You've got the renewed red listing of Spain and Portugal as COVID cases there are going up as well. Cases are on the rise here in Switzerland, UK. I think there is a case we're on a break of, do we pull back from the current push to reopen everything, which has probably been on a bit too quick trajectory. And
particularly the UK seem to be leading on that with July 19th now, their big sort of everything is open date.
Yeah, everything's open, but if you're a UK citizen traveling to another country, you might have to go back into quarantine when you get there. So there are still these undercurrents of no real coordinated EU response. It's still up to every other country to come up with how they're going to deal with the different COVID outbreaks in their areas. And how do you get more people vaccinated? The biggest issue that I see right now in Europe and getting Europe on a positive growth track is the fact that the 18 to 30 age bracket seems to be very reluctant to getting a vaccine. For whatever reason, there's a lot of different reasons why they have it out there, but that seems to be the big stall point, and that seems to be impacting the ability. I mean, I was reading yesterday from the AP that in the United States, the cases are growing in a lot of different areas in the South, mainly in the 18 to 30 age bracket, and there's a lot of these people ending up in the ICUs again. ICU caseloads are increasing, 90% occupancy in certain regions. And then you've got Michigan, or sorry, not Michigan, Illinois and Chicago instituting quarantines for people coming from the South going back north. So we're not out of the woods.
We've saw in Europe, Romania, Ireland buying 1 million Pfizer doses from Romania because there was no take-up or very low take-up of vaccine in Romania. So Ireland got 1 million from them, and they're oversupplied now, trying to find arms to put it into, where there's a very high rate of vaccine acceptance in Ireland and very low in Romania. These inconsistencies will certainly cause some problems. Carole, does it matter at this point when OPEC finally does come to an agreement as to when new supply, forget about all the quotas thing, which is the political nightmare for next year that they're haggling out, but ultimately the increase in supply that was expected from August, now that's essentially passed because August deliveries are already done and we're looking to September. Does it matter now when they get this deal done, this more supply coming to the market to essentially keep prices from going over $80 a barrel?
Yeah, not quite, because you see the market expectations are around with what you said. Everybody's expecting the barrels to come perhaps in September. And I'm not quite sure the picture is going to change drastically within the next couple of weeks. So in that respect, I don't see drastic changes. You will continue to see this kind of changes in oil prices, but at least having certainty that a deal is going to be reached, an agreement is going to be reached between the members, already a good sign to calm down the nerves of the market and various traders. But Sean, I'm listening to the conversation here and I'm wondering whether we are being gloomier than normal, because if you recall, it was like a kind of crescendo. We have been gloomy, very gloomy last year, and things got better. And then today we're talking about downgrades of forecasts, lockdowns, renewals of lockdowns, and it kind of clashes with the expectations that we had for the summer, where countries would open up, travel would pick up. But I'm not as worried as I was a few months ago, because still the oil demand growth will hold up. The
IEA report just last week is still pointing towards a 4.5 million barrel a day increase in the second half of the year to demand, which remains quite a bullish number.
Indeed. So we're not seeing real developments that are kind of derailing
Right.
Short-term changes. However, there is one thing which was not captured in the news, and maybe we covered it yesterday. I missed yesterday's talk. That is the economic news coming out of China. That, for me, is more worrying, because China is the second largest economy in the world and the second largest oil consumer in the world. And if this is the kind of trend that we are going to expand for the rest of the economies, because China was the first to come out of the COVID-19 nightmare, and people were looking at Chinese massive growth, the rebound in growth post-COVID-19 lockdowns, and now it's slowing down again. How long would that last? That, for me, is more important than the short-term noises.
Well, maybe, Peter, you could give us some of your thoughts on that. I mean, the China narrative, as we started out the talk this morning, remains a little bit cloudy. The idea that these economies in Europe, as Rustin was talking about, and the US, they've essentially learned to coexist with COVID reinfections, and obviously Europe very highly vaccinated, slowly but surely. Asia less so. What are your thoughts of that sort of China story in the second half of the year? Does it hit the big numbers, 7.9 on the average for the year?
Well, Sean, a couple of things. That first off, I don't think the 7.9 really, it didn't shoot the lights out to say, and I mentioned that earlier, if it would have overwhelmed and been on 8.4, everyone would be sitting here now and be clapping their hands going, wow, they've really they're really on fire. So it was a little bit underwhelming. And then you've got retail sales. I've just made some notes here. You know, industrial production, fixed assets, investments all experienced to have slowed in June. So that part of it, it's not a booming second quarter that we saw. It was actually a tailwind that started to lose traction. And where it goes moving forward, you've got, as I said, that southern region of China where you've got such a huge industrial hub, all of those supply chains, again, going through a lockdown phase. What happens there as far as export-driven economies? If we go back to a lockdown, are people going to renew are they going to lose, I think, the confidence, Sean? That seems to be very much on the footprint of Australians.
There's also reports out of the southern Chinese area, manufacturing area, where companies were refusing new orders because of the margins were being squeezed so tight by the rising commodity costs that they were just essentially saying, well, we're not taking any more orders regardless because we're not making any money.
Well, that's right. And then you've got, and I was just about to say, the inflationary impact, which is really beyond, I think that's the gorilla in the room. And that's really creating so much angst to consumers in the West. How much more expensive are things? And you've got all of those input costs being, we know, higher base metal prices, higher energy prices, higher foods, and a lot of people aren't getting higher wages. So it really comes down to how much is left in the wallet and the purse each week to buy those extra goods. And that's being demonstrated as far as that's where I see the next quarter or 2 quarters could be a little bit of a handbrake for China. And really, if we're all in a lockdown, Sean, it's going to be a very, very tough lead into Christmas.
But still worth noting that in June, the average throughput on Chinese refineries above 14 million barrels a day, which is a big number. Rustin, where is shipping at, sort of taking that Chinese narrative, the Asia to West Coast US? We talked previously, it was a very congested area, very high rates. What's that looking like now?
Well, on the West Coast, I was just actually reading about that. Los Angeles, the congestion has dropped, but it's still there. I believe the latest port report from the Port of Los Angeles, Long Beach, 10 large container ships waiting to come in. Time frame of them getting in is going to be over 3 to 4 day delays for those ships getting in and getting on the docks and getting out again. So, I mean, that's just the whole bottleneck is still there. As we get into the Christmas season, the projection is those bottlenecks are going to increase again because there is still this big lag effect of getting the boxes back to the port, back on the ships, back to the point where they need to be reloaded to bring goods back into the U.S. If you look at freight rates have come off the highs, but they're still high. Boxes from China to the U.S., or I'm sorry, China to Europe, $12,000 a few weeks ago. Now they're at $6,000 to $7,000, but they're still 300% higher than what they normally were. So that's still a massive price spike on freight to move things around. Now, from a consumer goods standpoint, yeah, it does price down, and so you do get maybe $1 increase in the price of your Nike trainers. But if you're buying a washing machine that's produced out of China, you might see an extra $300 attached to that good now. So it is.
It might be giving some credibility to the Fed position that this is a snapback on the pricing. The inflation will be temporary if we're seeing these sort of reverse of massive earlier price spikes on shipping rates and elsewhere.
It will. I mean, supply and demand drives freight rates, and so those rates will eventually correct, and demand will come back, and things will get. As long as you get rid of the bottlenecks, freight will move more freely than what it's currently doing right now. When you look at tanker rates, tanker rates took a beating yesterday. Forward FFAs dropped almost 50 to 60 cents a ton.
Whoa.
Calendar 2022 traded at 9, where a week ago it was 9.7, 9.8. Part of that sentiment is based on what the forward idea of what crude supply to the market's going to look like. And I think there's a lot of that negative sentiment is being driven by fear of renewed lockdowns and basically forward refining margins not being as robust as people want to make them look out to be.
Let's give the room a view to comment on some of this stuff, and I'd like to get the panelists' views on where OPEC Plus goes. But the survey question this morning is just looking at the OPEC Plus decision regarding output for the rest of this year. As it was reported 2 weeks ago when the meeting was actually taking place or not taking place, or whatever was actually happening, was that there was a 400,000 barrel a day increase from August through December, 5 months, 2 million barrels. That, of course, didn't happen, but it's still in the oven for being delivered. So my question is, regardless of when OPEC finally agree a supply increase for the remainder of 21, whether it's August or September, it should still add up to 2 million barrels a day to keep prices in the 70s. That's sort of the question. Do you agree with that statement or disagree that it should still be the 2 million regardless of when it starts in order to keep prices a little bit tempered and to meet this 4.5 million demand that the IEA told us about last week? So agree or disagree with that? And although prices are moving lower even without it at the moment, so that's a kind of a counterintuitive sense. But Carole, looking at the sort of macroeconomic and the politics of this decision that OPEC Plus still has to shepherd all of these actors together, how do you see it moving over the next week? I mean, we're at Eid in the next few days. It seems like the window to do any agreement is pretty tight.
Yeah, I think they will. I think there will be a happy ending for this drama. But maybe it would be the Eid gift where everybody forgives everyone else and allows some, spots from time to time. It's okay. So I am quite optimistic that a deal will be reached. But I couldn't get my head around the question of the survey, Sean. I wasn't sure. Are you saying that irrespective of when they would put those barrels in the market, that they should put 2 million barrels a day? So
it should still be 2 million, whether it starts in August or starts in September.
At the end of the year, that's what you mean, because I was thinking 2 million can go on and on for who knows.
Yeah.
Whatever they do, it has to be remembered that, a word that seems to be missing often from this conversation, how much oil OPEC is sitting on. The spare capacity has always played an important role in the direction of markets, and add to it that movement in oil demand, and you will reach a conclusion about what they should be doing towards the end of the year. So I said here, I agree without really understanding quite well the question, but it would be interesting to see what the rest of
in doubt, just agree with Sean. I like that, Carole. That's a good way to do it. Peter, the essential element of the point in the question is the price and its impact on consumers, and ultimately that OPEC Plus needs to be cognizant of not squeezing or killing demand recovery, and so keep prices under 80. Your thoughts on what the ramifications of that is for Asia? Does Asia care if prices go above 80? Are they happy in the 70s? Nobody seems to be screaming too loud.
Well, I think they are screaming, Sean. They're just not being heard. I think there's certainly screaming across Indonesia what we're here, certainly in India, very much in the Philippines. I'm sure Thailand wouldn't be over the moon, neither would Vietnam. Possibly China's okay with it. But the issue quite simply, and maybe that's even debatable, but at 92.3 for that US dollar index, and if Powell starts to say rumblings as far as, taper cuts and pulling, which he hasn't said yet, but certainly an inflation number, that US dollar is going to actually increase further if that is the talk. So you could see a 93 handle, 93 and a half. So that's really going to, again, cost more.
93 plus $80, that'll be a big squeeze.
Yeah, no, well, 93 and a half as far as that US dollar index, exactly. And if crude prices edge up higher, then, you're being hit both sides. So there's the side that I think, from a consumption point, we're addicted to crude oil, as we know, and those forecasts moving out, as Carole highlighted and yourself, what they are over the next, 3 to 6 months. The reality of the matter is you get crimped and you've only got so much in your wallet and your purse. And if it's going more to fuel and inflation, then you've got less to spend on other goods, Sean. And that really is not a good thing for any domestic economy, as we know.
Let's bring the answer to that confusing survey question up, agree by some long shots, so everybody's behaving themselves. I don't know what Sean's saying this morning, but I agree. Rustin, the element of the increase when it was announced a few weeks ago, the 400,000 per month, it was generally perceived as being quite a bullish number because demand was expected to be much greater than that through the second half of the year. And the IEA, as we said, came out last week at 4.5 million barrels a day of demand recovery in the second half. So 2 million, whenever it comes from OPEC Plus, is still a low number when 4.5 is the demand recovery. Your thoughts on that dynamic, and is it a low number, or is demand softening, do you think?
Well, again, the key word in your statement there was expected.
Yeah.
This is all forecasted ideas based on vaccination rates, COVID lockdowns not happening, and the markets returning back to some semblance of a 2019 norm. I think that if you look at the forward refining margins and how they're not robust in a lot of different areas, yes, in the prompt, you got a really good refining margin in the United States, which is reflective that there is good demand in the United States. But when you start rotating those margins around the world, margins are getting slammed in a lot of different other markets, showing that there is not demand for products, which is the end driver of your crude demand. So saying that we're going into a second half of the year under a robust demand profile, I don't see it yet being shown the economics. As I said earlier on the tanker FFAs, markets aren't trading as if there's going to be a lot need for crude to be moved on the forward curve. So if markets are showing that on a forward curve basis, I don't see the demand coming in as strong as the IEA. We'll see what the OPEC numbers come out today on, but I think the world needs to take a breath, probably take a step back, reevaluate, and reassess and move forward.
Well, I suppose we'll find out soon enough how much is baked already in the $75 oil price vis-a-vis demand recovery. And even with the tighter barrels from OPEC Plus, we might still see it trending down towards 70 price because there is so much baked in this price already. But we're not going to know because we're taking holidays next week for Eid. And when we come back, the world, I'm sure, will be very different a week from Sunday. And so for Eid Mubarak to all of those celebrating the Eid holidays, and to everybody else, have a great week. Obviously, the Middle East week ends today, and we'll catch up with everybody Sunday week with some sense of presuming OPEC Plus has a deal done, and we'll have something to chew the bone over. Thanks, Carole. All the best. Thanks, Peter. Thanks, Rustin. Have a great few days, and we'll catch up with everybody shortly. Thank you, guys.
Happy Eid to everyone. Thank you.
Bye-bye.